Hey, what's up, my friend? So here's what's happening right in the stock market right now. So as you can see over here, right, the stock market went to a high, right? This is the S&P 500, by the way. It went to a high of $4,800, right? Then it had a strong decline, a pretty steep pullback, right, to about $3,800 at this price point. So that's a decline of about 20%, okay? And then we had a slight, bounce up higher to where the price is right now. So now the question on most traders' mind, or even investors, is that, is this, just a dead cat bounce, right? Will the stock prices continue up higher from here, or will it, continue down lower, right? And the downtrend, continues down, and to see the stock price drop down another, 25, 30, or even 40%. So what's my take on it, right? So to answer this question, right, there are a few things I need to cover, right? So first and foremost, right, let me first and foremost share with you the 4 stages of the market that every trader, right, should know. So let me just hide away this chart first. So the first stage of the market is usually what we call the accumulation stage. This is where the smart money comes in, right, and buy stocks, right, at very depressed prices. So it looks something like this. This is the accumulation stage, okay, like this, right? So it kind of looks like a range market in a downtrend. This is what we call the accumulation stage over here. This is where institution, the smart money come in, right, and buy, right, stocks at really depressed prices. So usually at the accumulation stage, right, it occurs after the stock price could have dropped 60-70% or more. So after the accumulation stage, right, this is where we get a breakout, and this market goes into what we call an advancing stage. So this is where things are rosy, stocks are in the news once again. Stock market rally, stronger bull run over the last 10 years, stuff like that in the news. This is what we call the advancing stage, right? So of course the advancing stage, it will not go on forever. Eventually, traders take profit, the stock price, right, gets too far away from its valuation, and that's where we go into the distribution stage. So at this distribution stage, right, kind of again looks like a range, right, and it's where the smart money starts to unload their position, sell into the rally, because if you are an institution, you can't just simply sell on any given day, right, because your position size is so huge, it can cause the market to drop. So the best time to sell, right, is for people with extremely large account sizes like institutions, to sell during a strong market rallies. Okay, so when there's a newcomers coming in, like the new retail traders coming in, new blood coming in, and then you have the institutional traders selling in, right, you typically get a distribution stage where the market is not really going anywhere. And what happens after the distribution stage is that if the market breaks below this low of the distribution stage, is what we call a declining stage, where the market continues down lower and goes back into a downtrend or a declining stage. So these are typically the 4 stages of the market. So once this declining stage go down low enough, it then goes back to this one over here, the accumulation stage. So now the question is, right, where are we right now in the US stock market? So just to bring back the chart I shared with you earlier, right, you can see over here, if you look, I just zoom out a little bit, right, you can see that this could potentially be the start, right, of a declining stage. So you can see over here, this is the distribution stage that has occurred over the past 1 year or so. Then recently we had this breakdown over here. The stock price continued down lower, and now it retests this previous support, which could now become resistance over here. So that's where the stock market is right now. So, and as you can see, right, when the stock market now has, I think right now it's dropped about 15, 16, 17% or so, right? If the stock market drops this much, right, usually stocks itself, individual stocks, especially the tech stocks right now, they take even a larger beating. So for example, if you look at the tech stocks like Netflix, right, it's probably down like, I think, 60-70% from the highs, right? If you look at Amazon, right, down from 3,800 down to about 2,000 was almost 2,000 was the recent swing low. If you look at Google, okay, from 3,000 plus $3,050 down to a low of about $2,100. So you can see a lot of these tech stocks are taking a beating right now. So what not to do right now? So in this type of market condition, right, the last thing you want to do is to buy stocks in a downtrend. So let me repeat, right, I'm going to write this down because it's important, right? When stocks, right, are down, right, don't buy, at least from a trading standpoint. If you're investing, right, you believe in the fundamentals of the company, fair enough, go ahead and do. But here is from a trading standpoint. When the stocks are trending down lower, don't buy, right? Why do you want to buy stocks in a downtrend, right? Just because, those are popular names which you were familiar, let's say 1-2 years ago when it's rallying really high and now it's down, right? Doesn't mean it's a good time to buy, because stocks in the downtrend, what's likely to happen is that they are likely to continue down lower. Okay, so what you want to do instead is to actually buy stocks in an uptrend. You might be thinking, but Rayner, which stocks are in an uptrend right now, man? All the stocks are all pretty going down to shit, right? There's no more stocks in an uptrend. Well, not quite, right? Because I'm going to share with you this technique that I use, right? So I use this tool, right, this Finviz tool. It is absolutely free. Just go down Finviz, look for the screener. It's free. So what I like to do is that I like to look for stocks, right, that break out to new 52-week high, right, every single day, right? Okay, and I do have an additional filter here, just basically stocks that has at least gone up 100% over the past 1 year. So every day I just scan this screener and you'll give me a list of stocks, right? So these are the list of stocks, right, that I've scanned right now, and these are the stocks over here. Can you guess what industry of stocks are showing up right now on my radar? Right, take a guess. 1, 2, 3. Okay, let me tell you. So the stocks that I'm seeing up right here is actually stocks, right, from the oil and gas industry. And it shouldn't come as a surprise. Why? Because the Russian-Ukraine war conflict, that's one. Now that COVID restriction is starting to, ease, right? Airline is flying back again. There's a demand for oil. Oil prices are, continuously going up. So oil and gas industry, they are doing fine. So to kind of like prove it, I'm just going to highlight my cursor over here. You look at CVE, Cenovus Energy. This is an oil and gas integrated, whatever. I think it's probably integrated together. Okay, so that's in the industry it's in. Right? If you look at KOS, right, oil and gas, right, Cosmos Energy. I look down at NEX, right, oil and gas equipment services. All is oil and gas. So where am I seeing all this? Look at the box that is popping up right there. Override, it writes oil and gas. ERP. This is what ERF, sorry, oil and gas again, right? So you can see that a lot of all these stocks coming up is in the oil and gas industry. So this means, right, that what you want to do right now is to actually buy stocks in this oil and gas industry, because this sector right now is strong, right? Showing signs of strength. But the question is now which stock do you buy in this sector? Well, you can simply buy off the ETF, or you can actually choose, right, stocks, right, within this sector itself. So right now, I'm going to share with you a few stocks that I'm looking at, right, which are actually trending up higher despite, right, the stock market in the downturn. So let me point it out to you right now. So the first stock that I want to point out, right, is actually this one over here. DVN. So if you compare this stock over here to the S&P 500, you can see it's a huge difference. So if you look at the S&P 500, I click on this S&P 500, you can see that it's pretty much in the downtrend. The S&P 500 is making a series of lower highs, lower highs, lower highs. You can see that. But if you look at the stock DVN, Devon Energy Corporation, it's in an uptrend. So you can see that what this tells you that is this stock, right, is actually showing signs of strength, right, despite this market downturn right now. So if you want to buy stocks which are trending up higher right now, not stocks which are trending down lower. Buy stocks which are going up higher right now. Because you're a trader, you're not an investor, right? You probably hold this stock for maybe a few days to a few weeks and you're out of here. So buy stocks which are trending up higher right now, because they are likely the ones to continue up higher. And by the way, whatever I'm sharing over here, it's educational purposes or even entertainment, if you want to call it, right? Whether you make money or lose money, it is on your own responsibility. Cool. If not, quickly stop watching this video, but still hit subscribe, yeah? And, move on, right? So, again, it's all on your responsibility. Whether you make money, lose money, it's all on you, right? But if you make money, you want to share with me, I'm fine with that. But if you lose, right, the losses are yours to bear, right? So, anyway, Devon Energy, right? So, how can we trade this particular stock right now? So, let me share with you what I'm looking at for this particular stock. So, you can see that this stock clearly is an energy stock, like duh. It's in an uptrend. I just zoom out a little bit. You can see that this stock is making a series of higher highs and higher lows, right? Higher lows, higher lows, higher lows, higher lows, higher lows, higher lows, and higher high, higher high, high, right? So you get my point. And also, right, what I like about this stock is that from a little bit of a fundamental basis, right? You can see that this stock, right, it has beaten earnings, right, over the last few quarters, right? This over here is E, right? This means it has beat earnings expectations over the last quarter. This one over here, the last 2 quarters, the last 3 quarters, the last 4 quarters, it has beaten earnings expectations. So that's kind of like a good sign, right? Because earnings is strong and possibly due to higher oil prices. So now that we know that this stock is in an uptrend, right? The earnings is strong over the last few quarters. The question is, where can we look to enter this particular trading setup? So I want to point out to you is that if you look at this stock, right, you overlay with the 50-period moving average. What I'm seeing is this stock, right, tends to respect the 50-period moving average. Kind of like tested once, twice, 3 times, right? And we could come back here for a 4th time. So the area of value, the area that I'm looking to time my entry into this particular trade is somewhere about here, around the $65 to $67 price point. So looking for a potential pullback, right, towards this area of value, this area of support, and look for a bullish price rejection. Could be something as simple like a hammer like this, right? A hammer. Okay, something like this, right? So we get this, then you can look to enter on the next candle open. So again, for those of you who just want to, capture that one swing, that one move up higher, okay, you can, if we do get an entry trigger and the stock price goes up higher, you can look to take profit just before this recent swing high, thereby just capturing this one swing, right, in this particular stock, just one swing. So if you want to know what an entry trigger could possibly look like, just look at the past price action of this stock. This is what we call a bullish engulfing pattern. This is a bullish pattern. I don't know what's the name for that. This is something like a hammer a hammer or a dragonfly doji, right? It's a bullish price rejection. So you can see that basically the stock, right, has actually rejected lower price, closing up higher. So this is what we are looking for as our entry trigger, somewhere about here, okay? About here, right? Using the 50 period moving average and this as an area of value. Okay, so this is the first stock that is on my radar, DVN. Another stock to keep a lookout is Philips. Okay, so this one, the 50 MA, is not really too relevant in this case. But what I like about this stock, right, is that it is a stock, right, that is really strong. So if you look at Devon Energy, it's a strong stock, right? But if you look at it historically over the last few years, if I look at a weekly high, it has still, not yet, reclaimed back the highs, right, set in, the 2008 financial crisis. Still kind of like, halfway through, going back to the all-time highs. But if you look at Philips, right, so what's interesting is that if you look back, right, this stock, right, is trading at all-time highs, right? If I just zoom in a little bit, you can see that this stock is trading at all-time highs. It's currently right now, right, in the middle, in space, nowhere, right? Maybe you can go there and find Elon Musk, whatever. Yeah, so it's in the middle of nowhere, right, in space. So this stock, right, is showing signs of strength, and not only it has, breakout to new all-time highs, consistently, right? If you look at the daily time frame, right, it is also showing signs of strength, right? In shorter term time frame, like over the last few quarters, like the Devon Energy stock I shared with you earlier, it has beat earnings expectations, right, over the last few quarters. Here, and here. You see all the earnings, they're all green color. Green color means it has beat earnings expectations. Red means it did not beat earnings expectations. Yeah. So you can see that this stock, right, short-term wise, is also showing signs of strength. Again, looking for potential buying opportunities, right, in this particular stock, right, COP, Philips, sorry, I pronounced it wrongly. Philips, right? So where can we look for buying opportunities, right? So again, over here, I would say this is an area of value worth keeping a lookout. This is where previous, right, resistance, which could become support at around $104. So again, looking for a pullback towards this area of value, looking for bullish price rejection, right? And then look to buy possibly on the next candle open, right? Stops can go a distance below this low. And again, if you just want to capture that one swing, you can look to exit when the price retest this previous swing high. So again, right, yes, a quick recap, right? So yes, the stock market right now, it is not looking too good. You can see that it's potentially at the start of a declining stage, right? Just to bring it back to the stock market chart. Potentially, this could be the start of a declining stage because it has not reclaimed back this area of resistance, right? So this could be the start of a next wave down lower. That is possible. Likewise, right, the stock market could also, right, rebound up higher, right? So I will get back bullish on the stock market, right, if it can reclaim back this area. So if the stock if the S&P 500 can go up and break and close above this area of resistance, I will have a bullish bias once again. But until that happens, right, I will remain cautious, neutral to bearish on the sidelines. I don't want it to be blindly, firing trades. I want to be selective with my trades. And as of right now, I mentioned that the key sector to be looking out for is oil and gas. Let's call it oil and gas, right? And this is the sector that is performing well right now. And there are a couple of stocks I mentioned earlier, like Devon Energy, Philips. These are the stocks which are trending up higher right now, and there could be potential buying opportunities, right, in the coming days or weeks ahead. And by the way, if you are a trader and you find that trading in such a manner, using technical analysis, support resistance, a bit subjective, and you don't really want this type of approach, right, then you can actually consider systems trading. Systems trading is a trading method where you can trade using a fixed set of rules, right, without subjectivity, right, and you'll still be able to profit in bull and bear markets even during a recession. So if you want to learn about such a trading method where you don't have to deal with subjectivity and whatnot, you can actually join me in my free upcoming web class, right? It's called Stock Trading Secrets, where you'll learn how you can trade the markets, right, in a systematic manner, right? You'll learn how to actually be able to profit almost every year in the financial markets, regardless of whether it's a recession or a financial crisis, and share with you a very simple stock trading system that has generated about 3,225% over the last 22 years. So if you're interested, right, just come down to this page. I'll put the link somewhere below this video. All right, just fill up this form over here, right? Then you just click the orange button, sign up, and you're pretty much good to go, right? So the next event is on 26th June. We try to host this once a month, right? So you can come down to this page anytime and we'll update the next event date accordingly. So with that said, I wish you good luck, good trading. Stay safe. I will talk to you soon.